Hello again, everyone, and this is our next installment in our informational tax talks that we've been bringing to you over the last few weeks. And today we're going to talk about the standard deduction, or the changes in the standard deduction. Last week we talked about the personal exemptions and how that's gone away. That deduction is no longer available. However, in the new tax law, the Jobs Cut and Tax Act of 2017 did allow for changes in the standard deduction. Standard deduction is the amount of deduction that you get automatically if you don't itemize, okay? And pre-2017 tax law, prior to the Jobs Cut and Tax Act, if you were single, you had the ability to deduct $6,350 as a standard deduction. That's, of course, was outside of the personal exemption. And if you were head of household, you could deduct $9,350 as a standard deduction. You didn't itemize. And if you were married filing jointly, of course, you could deduct $12,700 if you didn't itemize. And of course, married filing separate, you would basically get one half of that, $12,700, so you would get $6,350. Now, under the new law, as of 1/1/18, so for filing of 2018, in the standard deduction, if you do not itemize as a single person, you will get a full $12,000 standard deduction. It means no itemizing. And if you're head of household, you will get $18,000 as a standard deduction. You don't have to worry about itemizing. And as a couple, married filing joint, you will be able to deduct a full $24,000 as a standard deduction. You don't have to worry about itemizing. And again, married filing separate, if you chose to go that route as your filing status, then you would be able to deduct $12,000 as a standard deduction. Now, the thing that's important here to note is that that seems to be a significant increase in the standard deduction. However, for those of you that are already itemizing to the tune greater than the standard deduction that was allowed in the past, the impact of doubling the standard deduction may not be as great for you. Because say if you were already itemizing your deduction, say as a single person, you were already up to $12,000 in standard deductions, or itemized deductions that is, because the standard was $6,350, then the change in the law as far as standard deduction is not going to impact you. Okay, same thing with a head of household person. If you're already itemizing your deductions, and when we talk about itemized deductions, we're talking about medical expenses, your charitable contributions, the taxes that you pay on your house, your cars, mortgage interest on your home, all those things. When they exceed the standard deduction, then of course you take them. So again, just keep in mind that just because the standard deduction has been doubled for many of us, that may not have a huge impact if you're already itemizing. And we'll get into the various things of itemized deductions and the things that have been changed, some of the changes that will be coming forth with 2018, for 2018 and beyond, as in our next segment. But today, the takeaway is to know that the standard deductions have been increased significantly. And of course, that helps to offset some of the loss of the personal exemption deduction. And we'll have some rate reductions as well, but we'll talk about that in our next segment. So again, stay tuned, and if you would like to have more information, of course you can reach out to us at Maurice Maurice_W@msn.com, or reach out to your tax advisor if you already have someone that you work with. Reach out to them or contact some tax professional if you want to know more information about this. Because this is an informational tax talk to bring you some awareness so we can be prepared as this new law phases in over the next few years, and starting, of course, January 1 of this year. So stay tuned, take care, we'll talk to you soon.